Investing in big-name stocks like Apple or Microsoft may seem like a no-brainer. Yet, at different times, both of these companies have reached a market capitalization of $1 trillion. That's more than the GDP gross domestic product of either Switzerland, Sweden, or Belgium. So let's discuss which one is the best, Apple or Microsoft stock. Welcome to the Upstep Financial, and for this video, we'll be talking about two big companies. But before that, make sure to subscribe to our channel and turn on the notification bell so you will get updated on our future uploads. It will also be nice to give this video a like and share it with your friends. So guys, with lots of money, buying stock in the future of a tech titan seems bright, but investing in these companies does come with its pros and cons. So, take the time to educate yourself about any stock before you invest, including the big name ones. Apple and Microsoft have battled each other for market share since the late 1970s. At different times, one has shown up to dominate the other. But in recent years, some investors have started to believe that Apple will fall behind as its iPhone becomes commoditized and Microsoft rises as a top player in the cloud. However, two rising trends may deliver stockholders a case for staying with Apple. Despite their competition, both companies have delighted in fantastic success. Apple has amassed the world's most giant market cap of around $2.41 trillion, whereas Microsoft has the second largest market cap at $2.21 trillion. Moreover, both have built cash crowds that all companies should envy. Apple holds $195.6 billion in cash on hand, counterbalanced by $112 billion in different forms of debt. Over the trailing 12 months, it created $80.2 billion in free cash flow. In comparison, Microsoft holds about $132 billion in cash against $60.5 billion in total debt. Free cash flow for the company came in at about $50.4 billion over the past 12 months. Nonetheless, almost no company, including Apple, matches Microsoft's AAA credit rating. Microsoft has built a track record of monetary stability despite its debt levels going back to the 1980s. It might also pay off its debt quickly with existing cash, bringing down its credit risk. Apple pioneered a whole industry through the iPhone, its most noteworthy revenue driver for more than a decade. However, in time, competition from lower-cost players using Alphabet's Android working system constrained Apple to offer lower-cost iPhones as the company's overall net sales fell. However, this circumstance may have changed. First, the pandemic brought about expanded iPhone sales as reliance on such gadgets rose. Now, Apple has launched the 5G iPhone 12. With the 5G iPhone's faster speeds, Apple recaptured a little estimating power. This has brought back a few of the higher edges that reinforced iPhone profits in past years. Moreover, Apple has maximized wearable sales by promoting the Apple Watch's health benefits. It not only monitors one's heart, but also measures blood oxygen levels and sends out a loud bell in case of a fall. Furthermore, Fitness Plus, Apple's fitness experience that works with the Apple Watch, launched on December 14th. Apple somewhat credited the Apple Watch with taking wearable sales 30% higher year over year in the latest quarter. Also, Apple's services division, which incorporates iTunes and the App Store, has accomplished striking successes with a 24% 12-month surge in revenue over the same period. Some analysts hypothesize that services may produce half of Apple's profits by the middle of the decade. As a result, Apple earned more than $294.1 billion in revenue over the last 12 months. This represents a 10% increase from the previous 12-month period. Also, thanks partly to the iPhone release last fall, overall revenue for the latest quarter increased 21% from year-ago levels. This revenue improvement led to a net income of almost $28.8 billion for the latest quarter, 29.3% higher than year-ago levels. In addition, an increase in operating expenses of only 12% helped contribute to the higher benefit surge. This growth took Apple stock higher by more than 70% over the last 12 months. Additionally, its price-to-earnings ratio has risen to 33. This stands out as Apple's multiple struggled to move above 20 before 2020. Still, its 29% net income increase does not match the growth in its price-to-earnings ratio during the same time frame. Thus, investors will also have to consider whether Apple now justifies its more expensive valuation. Okay guys, are you enjoying this video? If so, please give us a like and don't forget to subscribe to Upstep Financial, and also type your insights in the comments section as you're watching this video. Now, it's Microsoft's turn. Microsoft has moreover struggled for respect at times. When Satya Nadella became CEO in 2014, he acquired a company reeling from the decline of the PC and the slowing development of Windows. As the previous head of Microsoft's cloud and undertaking group, he transitioned Microsoft to a cloud focus. This was driven by the company becoming the second largest cloud supplier with a 15% cloud market share, according to Park My Cloud. This is behind Amazon, which spearheaded the industry. Other software supports Microsoft as well. For example, Microsoft 365, which constitutes its Office, Brilliantly Cloud, and Security Suite, fundamentally drives its efficiency and business processes division. This division makes up generally 1/3 of the company's income, roughly the same as 1 year ago. Still, income expanded 11% from year-ago levels. Inside that division, the Office 365 commercial suite surged 21% during that period, while its Dynamics 365 software, its ERP enterprise resource planning tool, registered a 38% increase for that period. Moreover, the company released its most recent generation Xbox gaming console late last year. Besides, Xbox Live, its interactive media social gaming service, has developed to 100 million monthly active users, whereas Game Pass now claims about 23 million subscribers. Overall, Xbox content and services income increased 30% over the last 12 months. Still, Xbox seems to have fallen short of its peers. Sony experienced 42% growth in its game and network services division, though Sony did not separate PlayStation revenue. Nintendo reported a 38% growth in its Switch platform. Unlike its peers, Nintendo hasn't launched a next-generation console since 2017. Despite slightly lower gaming growth, Microsoft stock has progressed higher by just under 50% over the last year. Also, its price-to-earnings ratio has reached 36. This far exceeds the price-to-earnings ratio of 15, where Microsoft traded when Nadella took over in 2014. Still, the multiple has fallen from a multi-year peak above 60 in 2018, when a one-time tax charge temporarily lowered the income and boosted the valuation. But Apple or Microsoft, which one is best? Between the two tech stocks, I think Apple still holds the edge. The 5G update cycle will drive all smartphone users to eventually upgrade, supporting iPhone sales and higher edges for a long time to come. Also, the development in wearables and services might add to that revenue growth. Besides, even with Apple's rising valuation, it still trades at a marginally lower multiple than Microsoft, despite higher cash flow and benefit edges. While this success will not nullify Microsoft's bull case, it gives Apple more potential for higher returns. So guys, I'm just giving you my opinion after this research. I am not a financial advisor. Before concluding something, do your own research to understand better. We are at the end of the video. Have you enjoyed this video? Then please leave us a like. You can also comment down your thoughts about Apple and Microsoft stocks, and share this video with your friends. Also, don't forget to subscribe to this channel and turn on the notification bell so you'll get updated for our future uploads. Once again, this is Upstep Financial. Thanks for watching. Cheers.